Ladies and gentlemen, it has happened. Mr. Kamath's arrival has coincided with the Vikram lander landing on the surface of the moon. It is history that has been created. For the very first time, a country has achieved what the team at ISRO has achieved. Yes, we can do better. We can give the team at ISRO a standing ovation, a round of applause. The Prime Minister is speaking at this point in time is what I can inform you. But what a moment for the team at ISRO. Specifically after what had happened the last time around, I would imagine that there is collective sense of relief and, of course, extraordinary happiness in the minds and hearts of every single Indian. And I'm sure across the world as well, people cheering on the achievement. And, of course, what a moment it is. Mr. Kamath, what a perfect start to this conversation, sir. Truly a moonshot moment for India.
Indeed.
Your first reaction to what you're experiencing as we see these images?
I first looked at the number, $75 million. And this is an impossible number. So it's almost like free mein kya milta hai. Chand mil gaya. I think it is not easy. Not easy at all, and congratulations to
It is a testament to the frugal engineering that ISRO has come to be known for, and you're absolutely right, $75 million and actually taking the lander to the surface of the moon, a feat never achieved before.
Indeed.
So, Mr. Kamath, if we were to then talk about what this means as a moment for India, and at this point in time, I know that you continue to be extremely bullish about the strength of the Indian economy, the role and relevance of the Indian economy in the global order, and those images now playing out on our screens right behind us as well, so we can enjoy both moments at the same time. You've often spoken about the fact that you're confident that India will be able to double its GDP over the next 9 to 10 years. Just in light of what we've seen happen in the past year itself, what are you most bullish on?
Yeah, I think several factors which makes one bullish. I look at two data points which are really beyond my conceptualization, I would say. One was the consumption of data. What has happened in the last 5 years. 5 years back, I could not have looked at the Indian data scenario and said that we would be the largest consumers of data in the world and be at the lowest price point. That's one. Second, even 4 years back, I would not have dared to say that we will have the largest number of daily digital transactions in our country, of any country. And there are large countries our size there, who were ahead of us on both metrics, and we could actually take a step beyond, as it were. That, to me, adds to several other things that are building up. That is, we start at the basics, the balance sheets.
Yeah.
The balance sheets of corporate India, balance sheets of the bank, financial sector of India. Last 3-4 years, the sort of cleanup that has happened. And the ability of corporate India to fund itself. Not necessarily come to the banks. And when I started my career, 4.5:1 was the total leverage. Long-term debt, working capital debt to equity or net worth was 4.5:1. And that then corrected, particularly in the 2000s. Post-Lehman, it came to maybe 2.5, 2.6:1. And now virtually no debt. So you have a situation which is in a way appropriate, or has created a foundation for the leapfrogging. So movement in technology, clean balance sheets, ability to invest, ability to grow. And then you look at the other side, who will consume? The consumer, my belief is, if you are growing at the numbers that are required to double in the 9 years that you mentioned, then the consumer becomes aspirational, and the consumer is ready. Again, if you want to look at, as this happened earlier, the period 2000 to 2005, 2008 was a similar period. The consequence of the opening up and steps taken in the late 90s. And let's put it this way, the white-collar revolution that happened, led by the technology companies, created a demand pull, as it were. And corporate India, which was then restructured, was able to meet the demand. Again, corporate India, as I said, clean. And today, the aspirational rush is created by all sectors. It is not just one sector. And I think even as we speak, there are more sectors being added day by day. Who would have believed that just in the last 6 months on the services export front, we have a positive. And that number, as I believe, is set to increase. And again, creates opportunities, creates aspirations and so on. So there's a virtuous cycle that is in motion.
You know, speaking of this virtuous cycle, let me address the first point that you spoke of, and that is what we've seen as far as data consumption is concerned. You're absolutely right. We've seen data consumption go through the roof on the back of the fact that we've got the lowest prices for data anywhere in the world. But specifically from a financial sector perspective, while it opens up opportunities, it also means significant challenges, especially for the incumbents. We just had Mr. Kotak here, and he said that is the one thing that he's most paranoid about, and he believes that that is the one thing that the sector needs to be most paranoid about as well. You cannot continue to believe that you enjoy the regulatory moat because technology is going to be the big disruptor. How do you see that playing out? How worried would you be for incumbents at this point in time?
I would be terribly worried. If you look back again 20 years, there have been maybe 3 inflection points in technology as far as everyone, but particularly banks are concerned. In India, it was the late 90s when we could not afford a mainframe, so we migrated to smaller boxes, maybe a Sun box and an IBM box. And then we brought in technology into everything that we did. Thereafter came the cloud. And thereafter, you had what I would call cloud native applications rather than something that was retrofitted to the cloud. Today, with the open source, a whole new equation has been opened up. And to verify this, to validate this, all you need to look at is the 1,000 or so fintech startups, that are out there, and the work that they have done with open source. It is tremendous. And if any bank really understands what work these kids have done out there, they will not go to sleep. I can tell you this, because I have tried to understand, sit with them, and see what they have done. No banker should be able to sleep. So it is the sort of work they have done at the sort of cost point that are there. So I jokingly tell people today, a banker should ask 2 questions, or somebody else will resolve these questions and proceed. Fit hai kya? Is it fit for purpose? Fit for purpose. And most of these things that have been done, yes, it is. Then free mein hai kya? So if it is fit and if it is free, then you are not able to compete unless you adopt the same mindset. So that's why I say that banks will have to relive what they are doing and relook at what they are doing. The good news is that there are several solution providers who are now almost ready with solutions for banks, which more or less meet this criteria. So and retrofitting is not as difficult as was thought. So somebody would have the courage to take the first step. So we'll see who will take that first step.
Speaking of the courage to take the next step, and you said fit hai and free hai. Perhaps on the fit, banks will be able to find the solutions, whether in-house or inorganically, by co-opting some of the fintechs onto their own platforms. But can banks really be able to do it for free, as we've seen in the case of VC-funded fintechs? And what will that then mean as far as the margins for banks are concerned? Many CEOs in this room would want to know your point of view.
I'm sure there are fintechs out here. They will say that actually, if you look at their costs, they're not that high. The technology cost is not very high, particularly with open source. And even from the time that fintech started disrupting the last 3-4 years, things have evolved now. There are vendors who are able to provide you a complete banking platform as a SAS model. So pay per customer at the end of the year, a sort of model, where you don't have anything else that you had all this time. And I won't say what all that is. The hardware, the people, the software, all those things basically can be swept aside, as it were, and you could put something new. So it's a dramatic tomorrow. And all I'll say is that no bank, no financial sector player, why only a bank, can afford to not be in this space today. That is, embrace the new. The digital startups, the fintechs have already done this. Their problem is a slightly different problem. So we'll When you talk of technology, I don't think I would like to talk about it, because they have excelled in technology. And that is what I think the incumbent players ought to look at. That is the sort of disruption that has been wrought. And try to see how could I do that as long as the technology is fit and it is free. Free meaning virtually free, not really you don't pay anything. You will have to pay appropriate charge for this.
Okay. That's as far as technology is concerned. But since you talked about the aspirational India and you talked about meeting the needs of this aspirational India with the hope of being able to double the economy, what about the appetite of the banking sector? What would you like to see change there? What kind of evolution will we now have to see? Where are we in that next leg of evolution to be able to meet the financing needs of the kind that we're speaking of?
There are two or three opportunities here and two or three challenges, Shereen. The first is, we need long-term funding, particularly for infrastructure. The banks will have to think deep on this, because you cannot really assume that term transformation will always work. And the banks typically are with the, 1 year tenor, 1.5 year tenor, depending on the bank, is their maturity profile of deposits. So you can't lend, let's say, 5, 7.5, 10-year money, even though you reset the interest rate. Somewhere you will end up running an interest rate risk. So banks will moderate their lending to long infrastructure projects. The good news is you have got other savings modes that are coming up. So whether it's through pension, insurance, et al., which are, their needs are for longer term assets. So an infrastructure company could actually issue longer dated products, and that would be something that would be picked up by insurance and pension funds. So I think a virtual cycle can be built as we go along. Then when you look at the banks have an important role. Banks would clearly fund what we call, in our project financing days, the shorter term needs of, not the short term working capital needs, but the initial 2-3 year need. Yes, you need to have skills in terms of analyzing and assessing implementation risk, but this is something which matches the tenor of funds they have. Probably could be a higher priced instrument, so they make money, allowing for risk that could be there. And later on, sell down could happen, and this could go to people who have longer appetites. A few years back, we used to talk of this, that is, originate and sell down. Could not happen because there was no counterparty on the longer end. Now there is a counterparty, the bunch of insurance and other players who need longer assets. So I think it's a right time to get this big push on infrastructure.
This next wave that we are in the midst of, which is really being driven by the advent and the adoption of technology, what kind of regulatory challenges does that throw up? And what kind of regulatory roadmap do you believe India should prioritize, India deserves at this point in time to cater to the innovation that we're seeing happening, as well as ensure that the guardrails continue to remain in place?
Yeah, I think excellent thought, because this is something that we need to now consider. But let us start with what data is up in front of us. I think the regulators have navigated the last 3 years, I'm talking now on the financial sector side, extremely well. The COVID challenge, the post-COVID handling of the economy, keeping interest rates low despite a lot of push to hike interest rates, which has allowed the economy to come back at the speed that it has, and at the same time nurturing technology and allowing it. And I would think that the regulatory approach of a sandbox is clearly working, and whichever regulator you look at today is working within a sandbox. And within that sandbox, if you look at the entire advent of fintechs and what they have achieved, I think is remarkable. Yeah, I have gone on record to say that what I see the fintechs having built is extraordinary platforms. They're extraordinary platforms. But unfortunately, their aspiration to valuations could have put them on a wrong track. So I'm sure they will correct themselves, and there will be a path for them. And I think at this point of time, they'll be carefully watched by the regulator. And the equation to me is very simple. If you do not make a profit, I can't see the regulator allowing you greater degrees of freedom to do various things. So it is basically, you regulate yourself first. And in that, I think the simple metric is you regulate yourself, govern yourself well, and make money, reasonable profit. And then I think the regulator will be open to looking at how you could expand your sphere of activity. So I think in another couple of years that will happen, because these players are very important from what I would say triggering systemic change. Because only by them being around will incumbents be able to change, because they would have had no option but to change.
So they've been able to trigger systemic change. The question is, how quickly will the incumbents then adapt? And you feel confident of the adaptability, or you feel less so?
See, again, the two metrics that I pointed out, the data consumption in 5 years, where it reached and at what cost, and our country being the largest, having the largest number of daily digital transactions, clearly indicate that you don't have too much time. If all that could be done in less than 5 years, well, UPI adoption virtually less than 3 years, 3.5 years. I would think that that's about the time that you would have to change.
So 3 to 5 year window is what you believe the banking sector has?
There is going to be a big rush of players doing various things. Now, let's step back and let's look at what all has already been disrupted, so that I should not appear to be just speaking my mind off, looking at a few data points. Question, what has happened in the broking industry? You had incumbents embedded there for 15, 20 years. Virtually in the span of the first 6 months of the COVID era, they were knocked off. And who were the winners? Basically straight through processors. At virtually, I would think, met that test, fit hai kya, free hai kya test. And they actually provided the product free. They may have made money in other ways, demat account and so on, but they disrupted. Who could be the next disruptors? I think the AMCs are going to be the next disruptors. Then would be general insurers. Life insurance is a little tougher. And the banks and NBFCs are, I think, clearly in line of sight of anybody who can, put into play technology in an appropriate manner.
In the line of sight with the 3 to 5 year window, those are cautionary comments coming in there from KV Kamath that I think industry does need to take note of. Speaking of disruption, Mr. Kamath, at the listing of Jio Financial Services, you said that it's going to provide growth momentum like never seen before. Lay out for us the vision that you have. I know you won't talk specifics, but lay out for us the vision that you have, sir.
I think anything that I say will be a forward-looking statement, and I don't want to do that. And this
5 years is too forward, sir. We're not asking you about the next quarter.
This is for the CEO to talk about, not for me.
What role and relevance do you believe an entity like this can play?
No, I sketched a larger picture for all players as to what's the disruption like. And I would think anybody entering the market today will need to wear that hat. And otherwise, I think success is going to be constrained.
What keeps you going? You're still at it. You continue to find new ways of staying relevant, of new ways of keeping yourself alive and learning, and opening yourself up to the opportunities that the environment presents. What keeps you going, Mr. Kamath?
I'll tell you, simply put, I keep going because I learn. Very simply put, that is all. BRICS Bank was a learning experience. NaBFID was a learning experience, and this also is a learning experience. So you don't stop learning, and you find purpose in learning. That's a simple and true, something I've said from my heart. That's all that keeps me going. Otherwise, I would not have. Actually, I said that I've had 3 times in my career I've said I'm going to retire. First was in '95, just before I got back to India. I had said, I went out to Asian Development Bank for a purpose. I am now actually putting in my papers and going back to India. Then Mr. Wagul happened. He came and said, leave. So I came back. And my wife asked me, what do you want to do now? I said, I want to go and learn. I may go to college again. I was then 46 or so. And I want to learn. This was 95 or so. Then it happened again when I stepped down from ICS. I said, I want to learn. And some of my colleagues actually gifted me books. So those books remained largely unread because I went on to something else. So it's this quest for learning, I think, keeps me going.
It's the unending quest for learning. What is the biggest lesson that you've learned in the last few years? Or the biggest sort of takeaway, the biggest realization for you in the last few years?
We are not factoring this in. There is the way the youth of, at least in our country, I don't necessarily track abroad, are driving directional change in their aspirations. All you have to do is, sometimes what I do is, before going to sleep, 10-15 minutes, I look at what are the blogs or vlogs on YouTube that are trending. This could be a 20-year-old kid who suddenly you find has got 22 million subscribers. He had less than 1 lakh subscribers just 2 years or 3 years back. You got daily views of 7 and 8 million. Now you then try to see what is driving these guys. What is then driving aspiration of others? What are the comments that come in? And it's a huge learning as to the sort of aspirational drive that is there in maybe the 10-15,000 comments this chap gets on a daily basis. I think makes your day in the sense that things are happening. The youth is driving forward. And indeed, he is earning very well. I salute every such person who is doing something interesting, where people are finding that this is inspirational and are trying to follow. I'm not talking of other things, of course, are there which educate you. But these are the sort of things, the youth, the way they are transforming is what is youthful. And today again, for a fintech, I'll say this. If your, what I would call initial focus group, we used to call it focus group, is not between the age of 15 and 18, you're not going to succeed. So if you have got a product, try it out with a 15 to 18-year cohort, and of course, pay them for, their advice. And then you see what will happen. Go to a school, run a session there, and you will get more inputs than all your senior team put together, mid-level team and junior team put together. So
is KV Kamath going to start a vlog anytime soon? No?
I'm content watching vlogs.
Okay, content watching vlogs. Ladies and gentlemen, a big round of applause for the long-term India bull. And of course, it's been an absolute pleasure. Thank you so much, Mr. Kamath, for joining us here this evening on a historic moment as we saw the Vikram lander land on the surface of the moon, India creating history. And thank you so much for being here and sharing that moment with us. Ladies and gentlemen, a big round of applause.